Hi and welcome to the Pat training video. Now this video is really in response to a post that I made yesterday, and that post was entitled Market Makers Remember, Do You? And the reason I sort of went on to do this video as it was because I was also talking at the time, or emailing backwards and forwards to a student at the time, a new student, and we were talking about where the market currently was, and we were actually covering the topic of market makers, do they remember? Now, when I talk about market makers remembering, I'm talking about support and resistance, but when I'm talking about support and resistance, I'm not thinking of it in the same context as all the books talk about it. And I really am looking upon this as where market makers have orchestrated turns in the market. And if you haven't gone over this on the DVDs or you haven't read my book, then get on over to Amazon and get the book. It's less than $10, so it's a pretty damn good deal to really get and then understand everything that I'm talking about in these videos that I present. Okay, so where were we? So yesterday the market was pretty much doing this. I was looking at the 15-minute chart, I was looking at the euro, and you can go back on your chart and find this. And the pattern had popped in the accumulation area here. You know, the software automatically pops this in for you. The market had gone down a little bit like this. It had gone up to around about here. And I was having this conversation with this trader at around about this time here. Now, what I was talking about was, he said, okay, well, you know, where's this market likely to go to? Now, of course, we need to know that, because if we can sort of forecast where a market's likely to go to, we can then observe what happens when a market gets there. If the market starts to turn down or starts to do anything really, we've got maybe a reason or a foundation as to making a decision based upon what the market's currently doing. So I said, okay, well, what I would want to be doing is thinking, okay, the market's got accumulation here, the market's come down a little bit, we can see a defined area there, market's now going up, this could be manipulation. If it's going to go up and turn down, where is that likely to take place? So what I did was then, I would go back to my 60-minute chart here, and I could see on the 60-minute we've got some defined areas. So I've just drawn these red triangles in here just to define that. So I've got these defined areas where the market makers have taken the market up and then brought the market down over a 60 minutes. So it's quite a nicely defined area, if you like. And I could see several of these on the 60-minute chart, as you always can. And what I did was I could see at 28.79 there was a line there. So I thought, sorry, not a line, the price at 28.79. So I thought, okay, what I'm going to do is I'm going to draw a line on there. I'm going to carry that through onto the 15-minute chart. I said to him, okay, well, that's an area there that the market might get to. And he said, well, this is quite old. You know, this is quite a long way back. And I said, well, that's immaterial, because we're not really going to use it unless something happens. If something doesn't happen, then this is of no value. We only want to see if it should happen on there. Now, actually what happened is the market came up, okay, carried on up, and the market said, and I said to him, this would be a good area to sell the market here if the market reacted. Okay, so the market then got up and did come down, and then went down like this and like that. Okay, now the conversation, this took quite a bit of time on here, and our conversation had sort of ended, and I was just sitting around doing other work and answering email and stuff, and I didn't actually see the market trade at this point here. If I had done, I would have sold the market, but you don't get any money for would haves and could haves in this business. So the market come down a little bit here, so instead of me actually getting in here where I would have wanted to get in, I would have wanted to sell the market here, I actually got in about here, which was okay, but you know, it would have been much better to get in at this point here as I saw the market come away. Now, at this point here, all this had done was validate this as being genuine. That's it. Gave me an opportunity to sell the market, very low risk, stop loss back on here. And I've got to get a stop loss on there about 15, 16 pips. And people say to me, you know, how on earth can you trade with such small stops? Well, the reason I can trade with such small stops, and why I teach students to trade with them, if you don't get the turns like this, if you don't identify this, then, you know, what are you doing putting a 50, 60, 70 pip stop on here? You're not reading the market. So you should be able to be using, or getting this down to a 15, 16 pip stop on here, and then pretty much straight down and getting the stop right back on that point as soon as the trade gets off down into the money. Why? Because that's the area you expect it to turn from. Why do you need a huge stop? If that's the way you're trading, that's where you expect the market's going to turn from. Okay, so the market then carried on down, messed around a little bit, and it came back on with the email, and I was talking backwards and forwards, and I said, well, here we've got a different situation, because here we've already got this area that's been defined in the 15-minute charts. In other words, we've got our accumulation patch drawn on, it's drawn this down, we can see this market, how it's played out. And I said, okay, well, where's that market likely to go to? And I'm thinking, well, clearly there is an area where you can see where the market makers have taken the market down and then taken the market back up. So I'd certainly want to extend that forward. And also what I'll do is I'll then work backwards and see if there's anything else. And there was there on the 60-minute chart at 128.38 was another line coming through that. Now again, this could have been anywhere. It might not have been of use for us, but as it happened, reading back from this point this time, I could see this historically, this had an effect. So clearly, I know that has been validated. So clearly it's going to be a possible use to trade from. Okay, and what happened was from my trade, so I sold the market in here. Okay, sell the market in there. Market came back down, sat with it for quite a long time actually. It's quite a lot of bars went up through here. Market came back up, I moved the stop down and I got stopped out there and I actually lost 8 pips. Okay, so I lost 8 pips on that trade there. And then lo and behold, a little while later, the market come back down, went through this period here and then started to move up. I saw this as the market started to come back and I then bought the market there, okay? So what I've done was now I've simply used this area here to define what might be going on here, but I don't do anything until it actually occurs. Once it occurs, I can see that this is valid. I can see that these are valid because of how the market plays out. Now, Pat's put the accumulation up for us. It's also already worked out my exit price. I know where I'm going to be trading this market to. And I've got my order in here. And where's my stop? Yep, you got it right down under here, just down under here. Nice tight stop on this. And my risk reward is fantastic because I don't expect the market to go any lower than this. Okay, the market then carried on up. And eventually I had to go to bed at around about here because New Zealand it was getting pretty late. Left the limit order on. When I woke up this morning, the market had, the trade had been triggered out, and I made 69 pips on the way up. So I lost 8 pips, made 69, net 61 when I got up in the morning. What I'm going to do is I'm going to put the chart up to this and the contract note so you can see actually on the chart. I'm going to put it in the video so you can see the chart and you also see proof of trades taken, you know, the prices where I took them and where I exited the market. Okay, so that's pretty much it. That's how the trade worked out. That's how I'm using the 60-minute backwards and forward. There's nothing new in here. This is what I've always done. This is what's on the DVDs. Some traders said, this seems to be all new. Why are we going back over here? And of course, nothing's new. We're just using exactly the same principles that's on the DVDs and in the book. And just talking in the book, if you haven't already got a copy of my book, if you're watching this this video for the first time, you don't know much about me or what I do, get on over to Amazon Kindle, order the book. It's less than $10. And for less than $10, you're going to learn all about the market maker's business model. You're going to learn how it works. You're going to learn how you can apply this very same information for yourself. Like I say, it's less than $10. It is on a Kindle format, so it's downloadable. Some people might say, well, I haven't got a Kindle. It's okay. You can just download a Kindle reader onto a PC, laptop, Apple, Mac, iPad, even a smartphone. So there's no excuse. You've got so many options to read an electronic book. And like I say, for less than $10, you can understand how all this works, the complete market maker's business model. So there we go. That's another one of the training videos. That's the sort of videos that I do for all the students. And that's it for now. I'll catch up with you very soon.